Hello, 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 hello. What's going on, everybody? How's everybody doing today? Welcome to Al Stock Trades. All right, ladies and gentlemen, in today's video, we got a good one for you. We're going to be talking about a few things. We're going to go ahead and increase that IQ level again for them investing. And you're going to learn something probably that you haven't had before. So this information was actually taught back in the 80s. And of course, not a lot of people talk about it. And it is what it is. That's how life is, right? And you just have to understand that you really have to go out there and learn this information. But luckily, I've designed a platform to integrate all of that. And the big thing right now is integration. So what do I mean by that? So in this video, we're going to go ahead, just kind of very quickly, we're going to talk about some philosophy. That'll be more at the end. And then we're going to talk about institutional ownership for Clover going up. And then we're going to go in and talk about this new software that I went ahead and created. This was actually, this idea came through one of our lifetime access members. Let me see if I can pull up the screenshot here. Let me see. His name is Grumpy Cat, Discord username. We have when people get our lifetime access, it includes lifetime access to Discord, so you guys can talk to me. We all have discussions. We have like so many gazillion channels. But yeah, he said, hey, morning, Al. This was like September 24th, 2:33 in the morning. And I was like, man, so I worked on it like literally for 12 hours. I was like, man, I like this idea. He said, morning, Al, the quantitative large versus small model, would it be feasible to have something similar, but at industry segment level, something that provides as an indicator as to when sector transitions occurs? I'm like, man, that's actually a pretty good idea. So we went ahead and did that. It literally destroyed me. It took a while, but it was good. It was good. We got it. So I'm going to go ahead and do it. Let me just go ahead and reload the page for folks that want to get access to this. Might as well show you here. So if you go to home right now, for folks that are in part of our lifetime access, this is part of the Advanced Al Stock Trades terminal. These are all the terminals you get access to. A lot. There's a lot of terminals here, right? This one is going to be called, if I can find it. There's some stuff I need to update, but it's called, actually, you know what? I haven't released it yet. That's funny. So it's not on here yet. You can see how many terminals are on here. So like if you want, I don't know, pick the VIX quantitative model, you want access to this one, you got, here's this terminal, right? But actually, I haven't released it yet. So I'm probably going to release it, the quantitative Contrarian sector. I'm probably going to release it to, whatchamacallit, probably after the live here. It's pretty much done. There's a couple things I want to add to it, but let me just reload the page so you can see. So here it is. And let's go ahead and open it up. So as you can see, very intuitive, very nice. The difference here is this looks at sectors. So here's the energy sector, right? Here's the healthcare sector. You could see, right, not doing so well. And here's like information technology, and you can see information does well. And, it's really funny because if we were to zoom in on this here, and if we were to zoom, you could see that right on April 7th was the bottom low. And you could see it touched the 200-day simple moving average right here, right? It literally touched it. You see that? And it's nice because if you do the RSI and MACD and apply it, you could see, if you buy at these oversold regions, it's a really good opportunity, especially if you look at stocks within that sector. So you could see, technology did really terribly here. There was a huge decrease. And then, if you would have gotten Robinhood here or whatever, Palantir, I'm sure you would have done really well. So now let's go ahead and actually let's figure out what the next. So there's a little button here. It's called Analyze Next Rotation Contrarian, right? And what Contrarian means, I terrible saying that word, right? What it basically means is, where is Wall Street going to go next, right? And the way you have to think of this is when everybody wants to go left, you have to go right. But the problem is you would have to look at each and every one of these data points. You have to look at all these data points, and who has time to look through all this? So what you do is you take the conglomeration of all this data and you hit this button. It's called Analyze Next Rotation. And it analyzes it quickly, does statistical analysis. And for folks that are interested from the science perspective, there's a base and pro mode. From a scientific perspective, it goes ahead and looks at RVOL, Ulcer calculations, and Hurst and Kalman slopes. Now, you might ask yourself, you're like, what the hell are these names? Again, I'm not going to bore you with the math, but these are different types of statistical methods to look for variations and patterns to see if, is a sector rotation imminent based off of nobody wanting it. So if you look at the table, here's the Contrarian rotation table. Here's the rank, meaning 1 is nobody wants to go into 1, and 2 is So let's go with. So it says here top Contrarian is for the pro candidates: energy XLE, real estate XLRE, and then healthcare XLV. Now it's interesting, and it shows you a MACD cross whenever it happens. So interesting, healthcare is up here. Don't you find that interesting? It means that nobody wants to be in healthcare. So based off of, again, our research and methods, I just created this. This is like me using statistical math and everything so I created this. So I don't know if this is going to work, right? I don't like all I did was pretty much okay, let me explain to you kind of the thought process here. Okay. We can argue that when people are fearful, you have to be greedy, right? And we can argue that when people are greedy, you have to be fearful, right? So pretty much is, if you were to mathematically put that into a kind of language, a computer software language, you pretty much basically say, first off, we'll dumb it down. We'll say whenever one goes left, you have to go right. Whenever someone goes right, you have to go left, right? So when you break it down mathematically, you can say, well, whenever 1 is equal to, let's say, greed, and then 2 is equal, let's say, to fear, right? And then you make a scoring system, right? Oh yeah, there it is right here. Let me see. There it is right there. Boom, right? Well, yeah, 1 equals 1. Exactly. You go ahead and create a computational system where you take the emotions and you mathematically compute them in an analysis. Okay, good. We're getting somewhere. Excellent. Let me just go. Oh man, I got some more comments here. Finally caught the live. Don't get to watch it at 2 times speed. Hey, I appreciate you. No, I mean, honestly, I don't know if that's a blessing or a curse, my friend. Maybe 2 times speed is where it's at. Al, I just got a pituitary surgery, and a few days ago, I thought to myself, I need me an AI reader stat, and you literally showed up a minute later. Hey man, that's really good. I'm very excited. Speechify is amazing. Again, I'm not like contracted by them. I don't get paid by them. I pay them for their software. Maybe I should honestly contract with them, given that I think I've developed a lot of trust with you guys, and I think it'll be probably something good to contract out with. But it's a great software. Maybe I might be able to get you a discount or something. AI as an Al, no Al. Oh, is that what he means? Oh no, you guys are hilarious. I don't even know the difference anymore, to be honest. A lot of people have told me that. It's really funny. But yeah, just watch. For the pituitary surgery, they usually come back a lot. The recurrence rate is pretty high. Just make sure you go back and follow up with your neurosurgeon, and just make sure you watch your water and how much you pee in terms of like that. So follow the neurosurgeon's orders, and because these things like to come back. Not all of them, but I'm sure your surgeon has told you that they're pretty recurrent. It depends what it is, macroadenoma and all these other things. Okay, then that's I don't think that has. I think that's good. Then I don't think that's a remnant of embryonic origin. I think we're fine there. An Al reading I needed. AI as an Al. I misunderstood you. My apologies. Okay, sorry guys. Yeah, no sleep making this damn software. So okay. So again, I don't again, I don't want to put a lot of weight in this because, again, I haven't back tested it. I just created this. This doesn't exist in the world. This doesn't exist. But computationally, mathematically makes sense, right? So theoretically, it should follow. And I didn't tell, again, so I let it run the analysis on its own, and it found healthcare to be in the top 3. Don't you find that weird? So just from our analysis, has healthcare been a loser? The answer is yes. Okay, so healthcare has been a loser. We know that. And by the way, I haven't influenced this data set whatsoever. I did not, in this data set, I did not say put healthcare high. That's not what I did. I wrote this code program independently. There was no indication that healthcare was undervalued. I didn't influence it. I'm just giving you the methodologies, like when you read a scientific paper. No pre-synchronizations and no personal coding that influenced it by looking at, it did the calculations on its own. Okay. So based on the list, XLE is the most contrarian. So let's figure out kind of what the situation here is and why. Why? I mean, I'm a bit interested too, right? You said XLE. Yeah. So I'm a bit interested in kind of it. So, I don't know. I mean, it doesn't make sense. I mean, that's why I was wondering. I'm just like mathematically, I mean, it makes sense why healthcare is up here. Let's see if we say base. Does the base change it? Yeah, energy and consumers and healthcare, and then it changes some of the things. Your real estate is switched. So can someone back test this? Triple top? I mean, I don't know. I mean, can someone back test this? Because it's basically saying energy. So I don't, B-Rad. I don't know if you're getting this. Okay. So it's saying that people are afraid of energy, real estate, and healthcare. Okay. Which is kind of funny because look at Open Door. Is it Open Door real estate? And everyone's piling in on it now. So if I was like, let's say like I want to build my portfolio next year. And what I want to essentially do is I want to figure out companies I want to invest in. I don't want to invest in companies down here, right? Like if you look at information technology, dude, this thing's on a rampage, right? This thing's on a rampage. And again, I don't know this, but Palantir and we called out Palantir at around $6. So I mean, I don't want to invest at Palantir at that level. So I'm expecting a cool down. So that's why information technology is down here. Now, again, is it saying that information technology is going to not rise? I don't think so. I think it is in the future. But again, probability wise, right? What's your net worth? My net worth is pretty substantial. Again, I'm not a Jeff Bezos or Elon Musk. It's all relative, right? But I am above average. I am a multimillionaire. You could see on previous posts on my YouTube, I showcased my portfolio. It's a public portfolio. It has over $1 million. I have another private portfolio. It has much more, but I felt like this will be a good one to show considering the wheel strategy we're going to be implementing on there. But yeah, no, I would say, it's good to ask these questions, because, you want to make sure you listen to someone who, or at least, like to a podcast that, knows what they're talking about. Right. Oil drops from 80 to 60 with no rise in sight. Energy most contrarian outside of new. Oh, okay. Again, okay. I didn't know that. It's been a while because, okay. So is that really what it is? So hold on. Let me see. Because Energy Transfer has been doing good. But again, Energy Transfer. Oh, shit. Energy Transfer is down 11%. But again, guys, it's been on a rampage, but it's been down this year. Oh, okay. Are the sectors to be looking at into next rotation as they are down the most? Exactly. So that, okay. Yeah. So, okay. I was just surprised because I'm just like, well, I thought energy was doing well. But it looks like there was a MACD cross that happened. Let's go on energy. Let's see. When did the MACD cross happen? What is it? MACD cross. Okay. So, okay. again, it makes sense that these are the sectors that are heavy hitters. Real estate is one of them. Interestingly, Open Door is in that area. And it's funny because now everyone's flying into real estate. And then obviously here's Clover, right? With the healthcare. Now, again, why am I putting weight on this and why am I talking about it? Well, I did not influence the data set. As you can see, I didn't know that energy was down. Again, I just created this yesterday, right? So obviously there is some statistical significance to this, and it does represent reality, right? Because we took core fundamental truths and we mathematically modeled them to bring this into perspective. And we took data, which unfortunately people don't get access to data, and we did mathematical computational work. And then again, this is available for lifetime access members. After the live, I'm going to be publishing it. For our members. But what's interesting, and obviously, next year you would again run it again or keep running it again, and you'll see essentially what's the most contrarian play. I can't freaking say that word, man. Freaking Peter Thiel, man. Think of a better word, man. Damn. Okay, so it's hard for me to say that damn word. So okay. Then you have financials, but so the goal is to look at these sectors and to say, okay, what are some undervalued stocks within XLE or within small caps within energy, real estate, and in small caps or healthcare? Again, and to use the Al Stock Trades terminal to look at the intrinsic value, see if the revenues are going up, free cash flow is going up, but based off of what I'm seeing here, yes or no, chat, please go ahead and answer the question. Did Warren Buffett buy healthcare this year? Yes or no? Can someone answer the question? Did Warren Buffett buy healthcare this year? Because if this is true, if this takes Warren Buffett's philosophy, be greedy when others are fearful, and we mathematically computate that, he already did. Exactly, right? He bought healthcare, right? So did Warren Buffett buy healthcare this year? And yes, Warren Buffett did a significant, here it is. I mean, here's the article. Let's pull it up. So on August 15, United Healthcare surges after Warren Buffett bets on recovery. August 15, 2025. So essentially, mathematically, this does represent reality. That's why I told you math doesn't lie to you, right? Your wife may lie to you, but math will never lie to you. I'm just kidding, right? It's not. Yeah, Michelle, me and Michelle are fine, guys. I'm just joking, okay? What did Michelle do to you? But but the thing is, it's actually pretty good. He bought in these sectors, XLRE, isn't that real estate? And he bought XLV, healthcare. There it is. So you see it, B-Rad. So you agree this is mathematically sounding then. Again, this is impressive. You see when you use this is why I tell you what bro, what the hell is Lennar? Oh, is that what he bought? I'm like, what kind of language is this, man? Yeah, that makes sense. Lennar. He bought Lennar. Is that what you're saying? I'm sorry, man. I don't know what the hell's going on. Let me see. Lennar, Warren Buffett. Is that what he bought? Holy shit. So there it is, man. That's so we could call this the Warren Buffett indicator if we really want to, but I don't want to. I don't want to take away from the contrarian model, but this is it. So mathematically, B-Rad, how valuable is this? So based off of what we created, so shout out. That's why I gave Grumpy Cat XP. I know Mr. Tabby doesn't like XP, but fuck, man. Excuse my language, man. I'm so sorry. But holy shit, man. I mean, it's very clear that big brain indicator. Yeah. Okay. So now that we this is very exciting. Okay, so good. So now based off of this philosophy, well, is healthcare next? The answer is yes. The answer is yes. Last year, and you know what I should do? Ooh, baby. Ooh, I just thought of an idea. Ooh, this is good. Ooh. Are you guys ready? I'm sorry. This is worth a lifetime access. No. Hey, I'm sorry I'm like moaning. I'm sorry I'm like moaning on the mic right now, but I have an idea. Ooh, this is good. Sorry, B-Rad. You see, this is what happens. These lifetime access members that we have are so freaking smart. We like talk about how we can like build software together and build out. Again, this is what happened. I opened up lifetime access to beta and I brought a bunch of people and I said, well, how can we build this? And okay, so are you ready? Are you ready? All right. So what happens if I backdate and backtest this analysis and I backtest it for, I don't know, 2015, 2016, 2017, 2018, 19, 20, 2021, 2022, 2023, 2024. And then it'll give me the table for every year. I don't, would that ASMRL, right? Do it, talk. You like that? Just do it. Do it. Talk no more. So you agree, right? You agree? So pretty much basically run the analysis, backtest it, and to see, because again, I only have this data right here in front of me. I don't have last year's data, and I don't have the year. I want to see 2023's data because I was curious to see if healthcare would be up there. Ooh, that would be so good, guys. 10 years and put each sector in the matrix. Absolutely, dude. Ooh, that's so good. Ooh. Right? So we can see the rotations over the years. Pip Daddy. Oh, dude, that's what I'm talking about. Guys, I freaking love you. Oh, I'm pumped, man. I freaking love you guys, man. You guys just make my brain explode. I love it. Here, let me okay. This is great. Hold on, let me put this in my notes. I gotta hold on, guys, because if you don't take notes, you forget these ideas. Oh man, let me see this. What the hell do I put this here? I'm gonna put this in the research edge because this is very important. Note to self during live for the Contrarian sector analysis. Back test for 10 years to see rotation and mathematical proof, pretty much. Yeah, excellent. Okay, guys, sorry. I came to you with a discovery showcasing healthcare. I was like wondering why energy was up there. I was like, really? I would think healthcare would be up. Again, that's how I didn't influence the data set. I didn't influence it because I was like, well, I don't know. Like, why is energy like not? Why is healthcare should be number one? But that's me influencing the data set. It's not. It's number 3. This is great. All right. I'm glad there's a group here that has strengths in areas I do not. I know this will benefit me, even though I don't understand it yet, but I will. No, absolutely. So B-Rob, essentially what this does is nobody wants to buy healthcare this year. Nobody, I mean, like after Warren Buffett bought it, now people like want to buy it, but like before that, no one wanted to buy it. But like nobody wanted to buy real estate. Nobody wants to buy energy. So essentially, what it takes the psychology out, and then how do you do this? It flips the psychology on its head. Okay, it flips psychology on its head, right? Because it kind of turns it upside down, right? So now, let's say, for example, we say, all right, energy, real estate, healthcare, and maybe some of these here, financials and whatnot. All right, fine. These are going to be doing well. Okay, now what? What do I do next? Well, before we move on, I'm going to talk to you about this presentation, right? This will be kind of an example, a little taste of what to expect for lifetime access. Again, we have access to the data, the software, but you need the education, right? You cannot, it's like you want to be a doctor, but you need to go to medical school. You want to be a pilot, you have to go to pilot school. You want to essentially use the Bloomberg terminal, you need to go to, business school. But even then, they won't even teach you the Bloomberg terminal. You got to work on Wall Street as an intern to go get coffee for a few years to get access to a Bloomberg terminal. It's bullshit, right? So for folks that are interested, understand this. We have about 3 more days to expire to use the coupon code to get you $1,200 off. Coupon code SAAS, SAS, not, SAAS, right? Double A, not double S. Okay. So let's go ahead and talk to you about something. Okay. So this information was out there in the 80s. The problem is, it's one of those kind of Peter Lynch's books, like in terms of in the 80s, One Up Wall Street type of ordeal. There's something that we would need to talk about to basically, teach you this. So there's a guy by the name of William J. O'Neill. I think he's like a millionaire or a billionaire. I think he passed away, but he's an American investor, entrepreneur, an author who focused on historical studies and top performing stocks. He's done pretty well. And what he does is he does integration, right? What is integration? Integration is taking technical analysis, fundamental analysis, institutional analysis, and putting it all together. Now, you might have to ask yourself, like, wait a minute, that sounds like Al, right? Let me see here. I'm going to go to the comments real quick. Look at the 52-week high. Which one? Which one? I've seen this before. Here is an example. You're still letting people in, Al. Knock it off already. No, I know, right? But imagine, though, like, this is some really good stuff, guys. I mean, man, you know what I mean? So, but we canceled the subscription model, right? Because we're not going to, right? Wait, what's the highest one? Which one? I'm sorry. I'm lost in the chat. I'm confused on the negative sides. Huh? I'm lost. I'm sorry, dude. I haven't slept, so my brain is like really messed up right now. I'm good at talking about things that I've done for like over 10 years, like stocks. But when it comes to other things, like I can't talk to you about anything else other than stocks. I don't know what the hell's going on. Sorry. All right. Ready? All right. So, oh, was that you talking about Clover? I don't know. Okay. So what is integration? So this is the problem with medical school. Medical school, though, they don't teach integration anymore, right? They've shortened their curriculums, where the curriculum now for preclinical phase is short. And there's like good and bad to any decision in life. The good is it'll allow them to do more clinicals, so they actually decide what they want to do for the rest of their life. Because it's not like nurse practitioners or PAs where they can kind of hop around different specialties. Once a doctor decides what specialty he goes into, it's pretty much, they can go to a different residency, but you don't want to do that, right? So I get it, but the problem is when you shorten a curriculum down, you just learn each curriculum in silos, right? You learn biochemistry, you learn a little bit of physics, you learn immunology, you learn epidemiology, cardiology, endocrinology. You learn a lot. There's like so many systems, right? So the problem is when you talk to a patient, you're not going to talk to just an endocrinology patient. You're going to talk to a patient that has heart failure, kidney failure, diabetes, maybe a cancer, God forbid, knock on wood. You know what I mean? There's going to be a lot of things, that this patient's going to have. And you can't silo everything up. You're going to have to understand that these diseases sometimes communicate, right? And this is called integration. These diseases communicate. The problem with a lot of retail investors, and by the way, dumb money is on its way. If they change the amount of day traders, you have to do day trades, you're going to have so much dumb money. And then people like us are going to make a shit ton of money because, it's going to be amazing. Because again, that's how we get it, right? So we will teach them. We will take their money. They will learn the hard way, and we will give them an education, and it'll be good because they learned, and hopefully some of them will learn. Some of them will keep coming back even at the age of 40. But we will keep teaching them until they learn, and we will enjoy their money, right? Because that's how it works. Well, welcome to Wall Street, right? And again, I'm not trying to say that like an a-hole. I'm just teaching you what Wall Street thinks. Again, it's kind of like I'm giving you what these people think, right? So back to the medical school concept, okay? So when you speak to a patient, you have to learn how to integrate because these diseases come together. A lot of these retail investors, they don't know how to integrate information, right? They don't know how to look at technical analysis and fundamental analysis and glue it together. They don't know how to do that, okay? So what I'm going to teach you is a guy who kind of created a mnemonic. He gets it right about 50% of the time. There's other areas that we need to look at that he hasn't looked at, like intrinsic value and whatnot, but he gets it, right? And he was successful. So he starts with the mnemonic. So the mnemonic is can slim. So C, I guess, could call it, for quarter, right? So quarter on quarter EPS must search. So focus on companies. So C C stands for current quarter earnings. So focus on companies whose most recently quarterly earnings per share jumped sharply versus the same quarter a year ago. As a rule of thumb, think 25% year over year as a baseline, and the bigger the leap, the stronger the signal. So that's what happened, Q2 2024. Clover was net income positive for the first time, and it like shot up, right? So accelerating profitability now, not someday. Overall, Clover's headed towards that. And how do we know that? Well, if we look at I was going to pull up the financial, let me just pull it up. Because the problem is you need when you do stuff like this, you need the data, right? So you go to the financial data analytics software, and you type in Clove, right? Now, overall, if you look at earnings per share, this doesn't include this, if you look at earnings per share, and if you were to graph it, you could see earnings per share. We'll start in 2020 because 2019 and 2018, it wasn't publicly traded. You could see how it went from 2023. It went from, negative $1.25, 71 cents, 45 cents, 9. You could see it's been trending positively, right? And if you look at the enhanced AI analysis and look at earnings per share, you could see earnings per share slowly started to improve by 43% above the 25% analogy that this guy's using. Okay. So, Clover makes that buck, right? A is for annual earnings. So multi-year EPS compounding. So prefer businesses that shows consistent annual EPS increases. Ideally, earnings compounded at roughly 25% or more over the past 3 to 5 years, demonstrating durable growth, not just kind of a one-off spike, right? So, again, back to, Clove, if we were to just look at just net income over the years, you can see net income has been trending up, and it's about to flip in the coming years. It's about to flip to the upside and be profitable. And that's when you get to that triple dragon, right? All right. Now let's go ahead and go to N. N stands for new product management news. And you could kind of think in your head, right? Think of Open Door. Has the earnings gotten better? Yeah. The most recent earnings was EBITDA profitable, right? And is it new management? Yeah, right. So think of Clove. Is there a new product? Yeah, Counterpart, right? Is it doing new things? Yes. Is there news? Yes. So catalyst that drives new highs. Look for fresh catalyst, breakthroughs, products, leadership changes, strategic wins, or other positive developments that pushes the stock to new price highs. These headlines can spark short-term excitement and fuel optimism and accelerating price momentum. So we're going to have a signal indicator that breaks down this mathematically for news. We already have it, but it's going to be a lot more sophisticated. But again, if we go to home, and like I told you a couple weeks ago, I said, hey, I know, Clover is at $2.50, but I'm telling you right now, the sentiment is actually going to go up. So let me go ahead and see market sentiment intelligence, not that one, the advanced sentiment terminal. So if we go to the advanced sentiment terminal, and if we go to, let's say, Clove, you could see that we're in the upward bound. Obviously, we're going down, but again, it's we're almost going to get to a whole new quarter. But you could see we were definitely negatively sentiment here in May, and then we were positively sentiment up here, and then the stock price was down in August, so it didn't make sense. The news was positive, but yet retail was not doing well. Retail was selling, and we have a bullish tilt. We run our machine learning analysis. We see mildly bullish, so you have that. So keep that in mind. So the sentiment is actually really good, right? I'm curious, what does Open say? Because Open's funny. Open, I think, is going to be off the freaking balloon. Holy God. Look at that. Look at that signal. Open just opening the gates to heaven there. August 14, major spike. What happened August 14? I mean, I want to know what happened August 14. August 14, what happened? August 14, we had a huge surge. And then what ended up happening? It followed up by, it going up, right? So again, there is some mathematical computational to this, right? There is a mathematical model behind this, okay? All right. So let's go back to the presentation. So now we talked about news, catalysts, and all this other stuff, right? So now let's talk about S. Again, CAN SLIM, CANSLIM. So what does S mean? When shares are scarce and demand swells. So price can climb quickly when limited supply meets strong appetite for a stock. Either share repurchases reduce the tradable float, often signaling insider confidence and anticipating stronger demand ahead. Signal essentially a shrinking float plus rising interest equals, not interest rates, but just interest in the stock equals tailwind. So did Clover buy their own shares back? Yeah. Most recently, they spent, on the first quarter of 2025, they spent $18.2 million at a price of $3.60. They bought back their share higher than what it is right now. And when the stock dropped, even after they bought down to the low twos, Vivek bought another $1 million worth of shares. So you can see how many shares are being removed from these paper trading retail investors, right? Because, so you have that, right? So Clover is also buying back their treasury, right? So you have an insider buying back shares. You have every time they do those tax loss harvesting shares, you know what Clover's doing? Instead of it releasing it to the public, I know it says they're selling it, they're buying it back. They're actually using money to buy back those shares. They don't want those shares to hit the market because they're valuable. So what they're doing is they're buying back their shares. So what that does is it removes a lot of share. And then you have people like me that are buying up shares. Let's not even talk about institutions yet. But what's ended up happening is you have all these retail investors selling, and then insiders are essentially taking off all those shares and buying. Okay. Now the L stands for laggard. What does a laggard mean? So within a sector, you may favor laggards. It sets up for, catch-up move. Using relative strength index, RSI, to gauge momentum extremes, readings below 30 can indicate oversold, potentially undervalued, while readings above 70 can imply overbought conditions where a pause or pullback is possible. Now, again, player one, I know, you watch the videos and I don't have time to tell you this. So I'm going to just say this right now. You see, player one, all you're doing is looking at technical analysis, right? And this is the technical analysis here. This is L, right? Right? This is your RSI. The problem is you also need to look at other things. You need to look at institutional analysis. You got to look at the SEC. The problem is you can't pull that data in TradingView. You can't pull up institutional ownership without, some form of data that you can get it from. So you got to look at, you can't be a pure technical analysis and you can't be pure fundamental analysis. You got to look at all of it and you got to integrate. It's all about integration. When the patient comes to your office and you want to see the patient, you're not going to talk to them about biochemistry. Okay. You're not going to talk to them about that. You're going to talk to them about the whole freaking body. Okay. So you got to understand that. Okay. All right. So, oh God. All right. So we got that. So now let's talk about the laggard. So let's go all the way down and let's look at Clove. Okay, and let's go ahead, open up candle mode. Let's open up RSI. So you could see from the perspective of when Clove started dropping, you can see the RSI, majority of the time, the RSI was what? It was in a very low territory. This is a great time to get it, right? It was a great time to buy Clover Health because, it was very low and you could see these prices were low. And then guess what? This has been a great time to buy because it was low here as well. So, yes, yes, it passes it, right? And then now my favorite, institutional sponsorship, backed by right kind of big money. Favor companies with select institutional ownership from managers posting recent above average results. For example, a recent public firm supported by a small high quality cohort. We saw that, right? We saw that was Renaissance Technology. They like to buy asymmetrical opportunities, right? And by the way, Renaissance, if you're watching, you have to report what you buy. You understand me? And you know what's funny, Renaissance? When you report what you buy, you leave a digital fingerprint. And every time you leave a digital fingerprint, you know what I do? I take that digital fingerprint and I take that data. And you think I just look at the technicals? No, I look at the fundamentals. I'm gonna make you. I'm gonna make you start sweating, Renaissance. I also look at the macro. I look at the jobs data. I look at every little data source out there. I even look at the weather. Oh, you're starting to freak out now, huh? I look at every data set and we put that in our model, right? That's what I'm trying to build. And I'm getting close. I'm getting real close. All right. So from that perspective, there's I. Okay, well, let's look up institutional ownership. So here's the institutional ownership terminal. Let's go ahead and have fun, right? So by looking up institutional ownership, here's CLOV. You put in CLOV here. Look at that. Here's CLOV. Look what's going on. Institutional ownership, investor holdings is increased. Let's look at it for a long time. We've never had, let's see here. Like, look at the history of this. We've never, in the history of the company, have never had this many institutional holders ever. Okay. In fact, if we were to go ahead and just, score it, you have an 8 out of 1 score. It's literally a bullish score for Clover. I mean, just look at the beautiful dynamics of this. Beautiful user interface. Now let's go ahead and analyze. We go ahead and analyze it, and then we, run our AI analysis, large language model, very fast, real time, actionable insights at the point of, you're going to sound like Andrew Toy, at the point of care. You got now this beautiful gold scroll bar that took me 2 hours to create, right? And then here's the expected analysis. And obviously it's going to go up higher as more institutional investors give us more data. Okay, so there it is. So here's your I. Okay, good. All right, what's next? M, align with primary trend. Review the major market average daily, the Dow Jones, the industry, to judge overall direction. Can slim names typically excel in bull markets? So trend context matters, right? So are we entering a bull market? I think we're in the early stages of a bull market, right? Where's the market going to ultimately trend towards? Well, to answer that question, we would have to go to our Contrarian indicator, and you can see that, yes, it's about to get into healthcare and about to rotate. And we know that because, well, what did Warren Buffett do back in August? He bought United Healthcare. So you can see how we are all data driven. This is all data driven, right? You see how much information this is. Everything is, ones and zeros and AI, and it's just all, there's no emotion here. It's just pure data. And I will argue you, if you can find any YouTube person out there that does this level of sophistication and research, and not just that, created their own software so other retail investors can do the same. I get it. I love you, Peter Lynch. You know what I mean? But we've designed something that is way more impeccable than the old stock shop, right? Which if you want access to, would cost you, over, 2,000, over 20, like around $20,000. And, this is how it looks like. It's freaking beautiful, which we'll go have fun with it. Right. So there's that. Okay. So now what else do we need to talk about? So there's M. So let's finish off the presentation. So can, earnings power with catalyst, right? C and A, spotlight robust EPS growth, and now over multiple years. N is for news sparks. Is there a new product? Are they giving new media, new news, right? A lot of retail investors focus on the N. We need more PR news. We need more news. We need more PR news. Guys, that's just only one of it. That's just part of the thing. You got to have the whole picture, okay? Slim, right? Market mechanics. S, weight, supply and demand dynamics, including buybacks. L for laggards, for RSI, for technical analysis. I for institutional ownership, SEC 13F filings. M, Is it synced with the broader trend? So you can see how powerful this information is. And this is called integration. This is taking intrinsic value, fundamental analysis, technical analysis, institutional ownership analysis, market analysis, sentiment news analysis, market sentiment intelligence. You're starting to realize that all of these softwares and terminals are all interlinking into one common goal, which is to essentially integrate the ability to find the truth. And what is the truth? Well, is the company undervalued or not? And you can see how much data that needs to happen to answer this question. And do you really think a simple Robinhood app is able to answer this? The answer is no. Okay. And, I by the way, I love Robinhood. Okay. All right. So there's that. And if you want access to this, you know where to go. Okay. All right. Now, what do I need to do next? I'm going to drink some coffee. Oh, yeah. No, they get it now. I mean, after kind of that drop, dude, I think that's, rate cuts, interest rates. It's going to be good. All right. So, shout out to Grumpy Cat. Okay. Yes, here it is. So, CLOV. All right. In terms of IQ, probably the best investors fall somewhere above the bottom 10%. You don't want to be below the bottom 10% because, you're not smart, but also below the top 3%. You don't want to be some genius, nerdy nut on an ivory tower that doesn't know the differentiation between your head and your ass, right? You're not really going to do well, right? You got to be somewhere in between. It's a balance. Peter Lynch went ahead and said, it's also important to be able to make decisions without complete or perfect information, right? Because things are almost never clear on Wall Street, or when they are, then it's too late to profit from them. You see, and that's what's going to happen. Once Clover releases the SaaS information and everything's basically crystal clear, that's it. It's too late. It's too late. Okay. Now, Noam Chomsky said, the indoctrination is so deep that educated people think they're being objective. So what does objective mean? So to define that, you have to define the difference between subjective and objective. Subjective is your opinion. Objective is like data. And what Chomsky's saying is, people that are the most indoctrinated are the ones that are the most educated. And if you think this is fake, well, this is a transcript of him basically talking about that. So let's go ahead and let's read this. There's really two separate questions about the media, which are usually muddled. One is what they're trying to do, and the second is what's the effect on the public. The effect on the public isn't very much studied, but to the extent that it has been, it seems as though among the more educated sectors, the indoctrination works more effectively. Among the less educated sectors, people are just more skeptical and cynical. Now, that's actually interesting. You see, I've realized this, and I was just, from someone like me who came from the poor, who came from the bottom, who came from food stamps, who came from literally the gutter of society. I entered college to be surrounded by these elites, right? Went to Mayo Clinic, Cleveland Clinic, to be surrounded by these elites and, professors and whatnot. And then as I started to basically spend more time with them, I started to realize that they were starting to formulate an opinion that did not reflect that of reality. And I started to ask myself this question. I'm like, why are these people so easily brainwashed? They just accept whatever someone tells them as truth, even though they understand the scientific method. And I realized that they even just accepted whatever they said as truth in lecture just so they can get an A and just mind up the information without actually integrating it into their DNA. And that's what I did, because I came like a freaking sponge that had nothing in it. I was like a bunch of, brain cells missing. I had nothing. I had no knowledge, right? So I really needed to get knowledge, right? And the problem is a lot of these people that are educated, they become indoctrinated more easily. So if you haven't realized that, a lot of them started to basically say, da 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 is a threat to democracy. Bada 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 ba is a threat to democracy. And then they start talking about, they have these buzzwords, fascist. They have these weird buzzwords that they get easily indoctrinated in. And they have these, it's just really crazy. You know what I mean? I'm not saying that, the other side doesn't do it, but really though, and this is Chomsky saying this, who's liked by both Republicans and Democrats, right? He said among the less educated sectors, people are just more skeptical and cynical, right? Like, I don't believe this, right? So you have to understand your weakness, right? You don't want to be too indoctrinated where you believe in anything, and you don't want to be too cynical because then you won't learn anything. Right, B-Rob? I'm talking to you, B-Rob, right? You don't want to be too cynical, right? You want to ask questions. You want to use it to your advantage, but you don't want to use too much of it, right? B-Rob, you don't understand the psychological background of how I know how you think, okay? Again, this is the relationship that I have with my Lifetime Access members. I mean, it's really a true personal relationship. We have a lot of members, and I have a relationship with the ones that interact, right? So it's really great, right? Okay, so there it is, okay? And the whole point is trying to, push you into your uncomfortable zone, right? So let's go back to right? Institutional ownership, right? Well, look at this, guys. 39.8%. That's great. We're about to hit 40%. We have 321 total, 312 institutional long, 0 short, 9 long short, taking the hedge. And that's pretty damn good, guys. And if you look at it, we got a new $4 million shares from Fidelity. They bought at $3.11. I know people don't get access to this, so you guys can see the numbers here. Yeah, you can see it's nice, isn't it? What do you think? Yeah? Not too bad. And by the way, these are not 13Fs. Just wait until the 13Fs come. Oh, baby. Right? Shout out to Gun Show. Right? So this is good stuff, guys. This is great, great stuff. Okay? All right. And there it is, guys. So if you guys want to access 3 days until it expires, take advantage. Again, this whole platform is to help you go from 0 to hero. Again, there's a lot of people out there that sell, I sell courses. That's all. You sell course. No, there's a lot of people out there that sell you bullshit courses. And again, we are not a course. We are a software platform that teaches you how to use the software. Okay. And this is how the futures of the courses are going to look like. Okay. You can see how elegant they are. Okay. This is not some bullshit thing that, I'm going to create a bunch of 5-minute videos. This is taking me 10 years to create. Like I'm trying to solve, if people listen, if people walk through people walk through this and follow what I have to say, I can, I can guarantee you that you will be better off than where you were 10, if you were to say, you put yourself, let's say you get this program in 2020, and then, you're 2030, let's say 2025, and let's say by 2035, you're going to say, wow, I have learned so much. Like, I am smarter. My life is better. Right. And you could talk to a whole bunch of Lifetime Access members and they'll tell you the same thing. Right. Because this is the real deal. Okay. All right, guys. God bless you all. I'm going to go work out. And I need to go get more eye drops, man. The whatchamacallit, the dust in the air is causing to irritate my freaking eyeballs. So I got to get some stuff. I got a nice dexamethasone eye drops with some thing I got to pick up from the pharmacy. Ophthalmologist gave them to me, help simmer down the inflammation in my eye here. So yeah, love you guys all. I don't know why I told you that, just thinking out loud. Appreciate you all, and I'll see you on the next one.